This is Andrea Wells with Insurance Journal reporting from the WSIA annual conference in San Diego. Let's just talk a bit about the recent big news for Skyward, your acquisition of Apollo Group, and what that brings to Skyward. I know that there are a lot of innovative products already through Apollo, but what does that mean for the next level of Skyward? And I'm curious why acquiring a market like this, or a market that has their own Lloyd's market syndicates, is helpful to you.
Yeah, certainly. I think first off, we know Apollo. We've spent the last year and a half working with them. We have ongoing business relationships. So oftentimes in acquisitions, you might not have that level of sort of inside knowledge of the target company. So that worked out quite well for us. We both have the same exact strategy, which is highly specialized, niche-oriented, high levels of underwriting acuity. We go after markets that are underserved in many cases within the insurance industry. So all of those things fit. I think also there's very little overlap in our portfolios, so that's a terrific benefit, especially in an insurance company acquisition. We don't have to deal with competing markets within the two organizations. We have independent portfolios to a great extent. While that's separate, what we do share is philosophy, right? A very innovative organization, growth-oriented, plus 20% CAGR since they incepted it in 2010. We're at 21% CAGR growth year over year since we went public in 23. So innovation and growth is core. Also culture, technology-driven, high underwriting acuity, a very strategic methodology to the way we go about using data and technology as a cornerstone of how we approach our market. So those things all fit very well. The benefits, as you mentioned, certainly the geography, right? It gives us, from Skyward's perspective, immediate entry into the Lloyd's licensing, which gives us a tremendous geography from which we can trade on the products that we have. The good news is numerous senior leadership members of Skyward have spent time working directly, living in London, working in the London market. So it's very familiar to us. The other thing I would say is we have a pipeline of things we're already working on, so those synergies are going to be pretty fast in terms of bringing new product to market or opening and expanding markets that we're already operating in within the U.S. And then the cross-pollination between the two organizations, right? Because as I mentioned, our portfolios don't overlap, so we can kind of sort of immediately introduce them to parts of the market that we have been able to scale in the U.S., and they can do the same for us relative to the Lloyd's market. The final thing I would say is acquiring A-plus paper and the Lloyd space, gives us a trading credibility in any of the areas where we do insurance that has a credit angle to it. Surety is a great example of that, where we've had tremendous success in the U.S., but we haven't expanded, say, to Canada or other jurisdictions because we didn't have the licensing. So far it feels like a very win-win-win. When I think about all the different things that as a D&O underwriter I would be worried about in an acquisition, it checks a lot of the boxes in the right way.
What's your outlook for next year?
Yeah, so E&S space has been terrific for us, right? We are highly innovative. We are a product developer, and being able to launch product into that marketplace is very fast. You think about the technology platforms, the utilization of AI that we've already are launching into our underwriting groups. It's going to make the product development piece faster. It's going to make the underwriting process faster. It's going to make, we're already fully digitizing submissions as they come in the door. That's already been solved for. So that platform is going to give us tremendous opportunity for whatever the next turn of the insurance needs are within the market. Many times that innovation happens in the E&S space because you can be faster to market with the product lines. Additionally, I think the overall growth of the market is certainly slowing. The rate environment is more compressed than it was a year ago or 2 years ago. But there are still pockets of investment I'm making. I'm investing into healthcare. I'm investing into life sciences. Excess casualty is still very interesting. And we're still growing in many of the core markets that we serve because our strategy is highly specialized. So we're not quite as susceptible to the swings between the admitted markets wanting more capacity and wanting more underwriting into what was E&S business a year ago, or that swing that we saw the last couple of years where the admitted markets are kind of tailoring down their underwriting strategy, thus the growth in the E&S market. So we're bullish on the space where we occupy, and I think innovation is going to be constant, right? There's just no way to look at what's going on in the present economy, the global economy, and not see risk that needs to be solved for.
M&A, it's been definitely many years of highly active M&A activity in E&S. Do you see that continuing?
Yeah, I think when the market is challenged from a rate perspective, right, that decreases the growth prospects, and so teams will look for M&A as a way of growing their portfolio. It certainly makes a lot of sense. I think MGA activity is going to continue. Right, we're still going to see new MGAs popping up. We're probably going to continue to see some of that M&A activity you're describing as private equity firms trading up in terms of MGAs that they had previously supported, selling off to larger private equity firms. I think we'll also see some consolidation there. I think there's some MGAs that frankly are not going to survive because the performance hasn't been as good as desired. I don't know, it's hard to say specifically in the larger specialty insurer, because that's always challenging within the US market. So I think it'll be less frequent than it was previously. I think at the broker level, there's some really big players out there right now. So I think those transactions will be smaller, but certainly there's less opportunity for them because they've done so much acquiring in the last few years. But most of that will come around like what the multiples are and what people are willing to pay for the growth.
The Risky Futures Summit 2025. Don't miss out. Click the link in the description to sign up or apply to be a speaker for our Risky Futures Summit 2025 before seats fill.